Hello, and welcome. If you're watching this, you're already taking a powerful first step, choosing to learn about investing. Whether you're brand new or just looking to brush up on the basics, you're in the right place. Today, we're talking about making your money work for you, the heart of investing. Instead of letting your cash sit idle, investing gives it a job to grow and multiply over time. Investing means putting your hard-earned cash into assets you believe will grow, like stocks, bonds, or even cryptocurrencies. These are things you expect to increase in value, so your money can build on itself. The goal? End up with more than you started. Over time, even small investments can add up, thanks to the power of compounding and growth. It's not about getting rich quick, but making smart, informed decisions over time. Patience and consistency are key. Think of investing as a marathon, not a sprint. Remember, all investing involves risk. There are no guarantees, and sometimes things don't go as planned. Markets can go up and down, and it's important to be prepared for both. Never invest money you can't afford to lose. Your emergency fund and rent money are off limits. Always make sure your basic needs and safety net are covered before you start investing. Investing is for your long-term goals, not your day-to-day needs. It's about building a future, whether that's buying a home, funding education, or planning for retirement. When you buy a stock, you own a small piece of a real company. You become a shareholder, and your fortunes are tied to the company's success. If the company grows, so does your investment. If it struggles, your investment can shrink. Stock prices move for many reasons, and it's important to understand what drives them. Cryptocurrencies are different. They're digital tokens not tied to company profits, and their value is driven by technology, demand, and speculation. They can be exciting, but also very volatile and unpredictable. Before investing, do your homework. Research the assets you're interested in and make sure you understand how they work. Know what you're buying and why. Ask questions, read up on the basics, and don't be afraid to seek advice from trusted sources. Ask yourself, are you comfortable with the risks? Every investment has upsides and downsides, and it's important to know your own comfort level. Does the potential reward justify them? Only you can decide what's right for your situation and your goals. Today, we'll look at a stock, WAG Group, and two cryptocurrencies, FIDA and DEXT. These examples will help you see the differences and similarities between traditional and digital investments. We'll break them down so you can see how to analyze an investment. You'll learn what to look for, what questions to ask, and how to compare your options. This isn't about telling you what to buy. No one can predict the future, and there's no one-size-fits-all answer. It's about teaching you to think like an investor. The more you learn, the more confident you'll become in making your own decisions. Make decisions that fit your goals and your money. Your investment journey is unique to you, and your plan should reflect your life and dreams. Let's get started on your investing journey. Remember, every expert was once a beginner, and every journey starts with a single step. The first step is always education. By learning the basics, you're building a strong foundation for your financial future. Let's talk about WAG. Group company, ticker symbol PET. If you're a pet owner, or just interested in the booming pet care industry, you've probably heard of WAG. But there's a lot more to this company than meets the eye. WAG is a tech company built for pet lovers, connecting owners with trusted dog walkers, sitters and trainers through a user-friendly digital app. Whether you need someone to walk your dog while you're at work, a sitter for a weekend trip, or a trainer to help with behavior, WAG brings these services right to your fingertips. It's a marketplace designed for convenience, making pet care easier and more accessible for busy families and individuals across the U.S. With just a few taps, you can find, book, and pay for pet care, all in one place. But WAG wants to be more than just a dog-walking app. The company's vision is to become the go-to platform for anything and everything related to pets. They've expanded into pet insurance, food reviews, and even pet products, offering a growing suite of services that cover nearly every aspect of pet ownership. The goal is to be a one-stop shop for pet owners, so you can insure your pet, read reviews on the best food, and shop for treats, all without leaving the app. The strategy? Build a complete pet ecosystem. Get pet owners in for one service, then offer more, creating a seamless experience that keeps users coming back. The more users and caregivers on the platform, the better the service becomes, creating a powerful network effect. As the community grows, so does the value for everyone involved. By adding insurance, reviews, and products, WAG hopes to become essential for pet owners, generating revenue from multiple sources, and building loyalty through convenience. Investing in pet isn't just about a single service, it's a bet on the whole ecosystem. and on the company's ability to keep innovating in a fast-growing market. The pet care industry is huge, with Americans spending billions every year on their furry friends. From food and toys to healthcare and insurance, people are willing to invest in their pets' happiness and well-being. The big question is, can WAG successfully integrate all these services and capture enough of that massive market to become a leader in the space? That's what investors need to decide as they consider whether WAG Group Company is the right fit for their portfolio. Now, let's look at the numbers. Because when it comes to understanding a company's true health, the financials never lie. They reveal the real story behind the headlines and marketing spin. This is where we see what's really happening beneath the surface. In 2024, WAG reported about $70.5 million in revenue. That's a significant 16% drop compared to the previous year, which is a worrying trend for any business, especially one in a competitive industry like pet services. Declining sales are a major red flag for investors, signaling that the company is struggling to attract or retain customers, or facing increased competition. When it comes to profitability, things look even more concerning. In 2024, WAG moved from a small adjusted EBITDA profit to a $1.1 million loss. That means the company is not just making less money, it's actually losing money on its core operations. The company is spending more than it's bringing in, which simply isn't sustainable in the long run. If this trend continues, WAG could face even bigger financial challenges ahead. The balance sheet is also under pressure. WAG's current ratio is just 0.51, meaning it has only 51 cents in liquid assets for every dollar of short-term debt. That's a clear sign of a cash crunch, making it difficult to cover immediate obligations. The stock price tells the same story, trading under $1, down more than 90% in just a year, and with a market cap that's now under $10 million. That's a dramatic fall from grace. Investors are understandably pessimistic, seeing the combination of declining revenue, mounting losses, and a weak balance sheet as major warning signs. These are not just minor setbacks, they're serious warning signs that should make anyone think twice. The numbers paint a clear picture. This is a company in real financial trouble, facing multiple headwinds at once. So, before you consider investing, always take a close look at the financials. They're your best guide to what's really going on. When a stock falls as much as WAG's, bigger problems arise. NASDAQ requires stocks to stay above $1. WAG has been trading for pennies. In March 2025, NASDAQ sent a delisting notice. WAG risks being kicked off the exchange. Delisting means less visibility, less liquidity, and even fewer investors. To avoid this, WAG approved a reverse stock split, combining shares to boost the price. But this doesn't fix the business, it's just cosmetic. Combined with debt and cash burn, WAG faces existential threats. For investors, these are giant red flags. Proceed with extreme caution. So why would anyone buy Pete's stock? The bull case is all about a dramatic turnaround. Management projects revenue will rebound in 2025, surpassing previous years, driven by new wellness services and partnerships. Bulls believe the market has overreacted, making the stock undervalued if the turnaround succeeds. WAG has a strong gross profit margin, over 77%, meaning its core business is profitable before overhead. If revenue grows and costs are controlled, profits could scale quickly. Some analysts see big upside if the company hits its targets, but this is high-risk, high-reward speculation. If the turnaround fails, losses could be total. Only invest if you're prepared for that risk. Now, let's shift to cryptocurrency, an entirely different asset class. We're looking at FIDA and DEXT, utility tokens for DeFi platforms. These aren't companies, they're keys to digital economies. FIDA powers Bonfida, a suite of trading tools on the Solana blockchain. Holders get trading discounts, staking rewards, and voting rights. DEXT is for Dextools, a popular analytics platform for decentralized exchanges across many blockchains. Holding DEXT unlocks premium features and advanced tools. Both tokens' value depends on the growth of decentralized finance. If more people use DeFi, demand for these tokens could rise. But crypto is volatile, prices can swing wildly on news or sentiment. Know the risks before diving in. Let's compare PET, FIDA, and DEXT. Not just what they are, but their risks and rewards. All three are highly speculative, potential for big gains but also total loss. Pet's risk is company-specific bankruptcy, delisting, and business failure. The reward? A real-world turnaround could send the stock soaring. FIDA and DEXT aren't at risk of bankruptcy, but their platforms could become irrelevant, or the crypto market could crash. Their value depends on user adoption and crypto trends, not profits. In a crypto bull market, prices can skyrocket. But if DeFi loses steam, these tokens could become worthless. PIA is a bet on a business comeback. FIDA and DEXT are bets on the future of decentralized finance. Both paths are risky, but in different ways. Know what you're betting on. Let's use a real estate analogy. Investing in PET is like buying a rundown house in a troubled neighborhood. Cheap, but risky. Fix it up, and you could profit big. Fail, and you lose everything. FIDA and DEXT are like buying land in a futuristic city still under construction. If the city thrives, your land becomes valuable. If not, it's worthless. With PT, you're a renovator betting on a turnaround. With FIDA and DEXT, you're a pioneer betting on a new world. Both are risky, but for different reasons. The key is understanding what kind of risk you're comfortable with. Are you a fixer or a pioneer? That's the question every investor must answer. Choose your path wisely. So, what should you do? Invest in stocks like PT or crypto like FIDA and DEXT? Only you can answer that. The goal here is to empower you to make informed decisions. Be honest about your risk tolerance. Can you handle big losses without panicking? High-risk assets should only be a small part of your portfolio, if at all. If you're comfortable with risk, do even more research. Read reports, follow trends, and understand what you're buying. Knowledge is your best defense. You don't have to choose just one path. Some investors diversify. The most important thing? Have a plan. Know why you're investing, when you'll sell, and stick to your strategy. Your financial future deserves discipline, not luck.